session, and so you will know that each and every session is being recorded, and a copy is sent out to you usually within the hour after the session. Okay. So first of all, let me welcome Paola here, our translator, our favorite translator for the Spanish room here. Really good to see you, Paola. And let me start right away by showing you here what Tyler Crandall looks like. He's there in the middle. Okay. Let me start my pen here as well. There we are. Okay. Yeah. So Tyler is here. Okay. Tyler is in California. And then there's Tony here. And to be honest, I have no idea where Tony is at the moment. He's supposed to be in Florida, but it looks like he's traveling or so. I hope to see him later today in the session here. And then on the right side here, this is me. I'm Jan Humme, and I live in Malaga, Spain, the Malaga province. Okay. So today is our first session. Let me just start by saying, well, first of all, welcome all of you new members. There's quite a few new members here. I'm very happy. We're very happy to see that, of course. And what we always do is, what I always like to do is start out by giving you a little bit of a background here, how this has all started. So basically, we started talking about coaching when Oliver visited Spain for the first time in his life. That was in 2018. And he was here. We traveled all over Spain, and we were talking about how we could help out to the whole iPhone Traders organization. And he was actually asking us for help. And why did he do that? Well, basically, the main point was, he told us the main thing where I need help, he says, is in providing structure to new traders. And the point is that he says, look, I have a lot of new traders signing up all the time, but the point is we give them some information, we give them a session once in a while, but what I see that they really miss is structure. So they're all over the place, and they're trying this, they're trying that, and there is no systematic approach to trading in what they do. And this is what we were talking about when he was in Spain. And this is where the coaching program was basically being founded, okay? So this is what we are going to do. This is our main goal here with this coaching program, is we're going to help you guys to structure your development as a trader. And let me also say that there is, of course, there's a lot of new members here. There's also quite a few members that have already been with us the last month or even for a couple of months. And it is always good to hear all these things once again. I'm sure that members that signed up again for the extended their membership are going to see, they're going to hear a lot of things and see a lot of things that they heard before, but maybe not in so much detail. They're going to see other things that they think they missed in the first time they heard it. So repetition is very important here. Because you're growing as a trader, and as you're growing as a trader, you will hear and see other things that you were not ready to hear or see previously. Okay, so it's always good to go over things again. So structure. What are we going to do? Well, mainly our focus is going to be, first of all, in how. Actually, I should change this. It still says eliminate your big losses, but the better phrase is how to lose properly. How to lose properly. That is actually what it should read here. How to lose properly. So that has to do with risk management. Okay. Yeah, it's one of your favorite phrases, right, Tyler? So that has to do with risk management, stock selection, and stuff. Okay. And also in identifying where your biggest losses are. I'm going to talk about that in the next hour. The other thing we're going to do is we're going to show you how to trade in accordance with Oliver's famous checklists. Oliver has a checklist, a trading plan. if you like, that he always presents in his live trading camp meetings and also in the mentorship. There are some variations to this plan. There's little different accents depending on what it's exactly being used for, but the main points are always the same. And we decided to use this trading plan, this checklist here in the coaching as well, because we need to have some common ground here, right? If we're going to talk about trading and looking at your journals and reviewing them, etc., we need to have a way to look at this so that we can all agree on what is going on there, right? And what is good trading, what is bad trading, and where improvements could be done, where mistakes are being made, etc., etc. So that checklist we're going to present to you, okay? And the other thing we're going to do is we're going to teach you how to journal your trades, because there is a lot of value in journaling your trades. Now, of course, this is not always the most attractive part of trading. Most traders are actually quite lazy, and I hope you're not one of them. Lazy meaning that what they really like to do is just sit behind the computer and trade the market, hitting buy and sell keys and everything else, hoping to make a profit, and then often ending with a loss, and then just leave it at that, and then start again the next day as if nothing has happened, hoping to perform better tomorrow. But the key, of course, is in digging for your mistakes, looking at your trades, evaluating them, trying to learn from them. That's so tomorrow you will be a better trader. Okay, you come to the markets better equipped, and that is work, of course. So we're going to have a whole session about how to journal these trades, and those are the three main points here, right? And then really what is the larger part of this session, of this coaching program, is reviewing your trades. So what we're going to invite all of you to do is send in some journals of your trades that you have been doing. Could be 1 trade, 2 trades, not more than 2, preferably, because otherwise we'll have so many journals that we cannot possibly deal with them, and we'll just have to pick from them. So it's best if you pick 1 or 2 journals that you were of 2 trades, 1 or 2 trades that you have been doing, and you send them in for review. And that we will make sure that in each and every session, at least 1 of your journals will be reviewed. Okay, there's not enough time. We'll always make sure that we sort them in a way that each and every trader gets at least 1 journal reviewed. Okay, so I hope you can see here that, so with how to lose properly, and then using the checklist basically as a basis, and also how learning how to get feedback from your trades by journaling. This is what we're going to do to use to review your trades. Okay, that is basically the idea for this coaching program. So the coaching program, it starts every month, and it consists of 8 sessions, okay? And Tyler, here's your favorite sentence. There it is. Look at that. Session 1, how to lose correctly. So we're going to talk about today. I'm going to talk about that, okay? And the second half of the session, Tyler will do some trade reviews of journals that have been sent in by coaching program members that have already been with us last month, okay? And then in the next 2 sessions, probably Tyler will do this part again. He usually does this. He will present to you the checklist, and that is quite a big thing. So it will take 2 sessions to do this, right? However, we always do it like this, like 1 hour of theory, like checklist part 1 will be the first hour. The second hour will be reviewing journals again. Okay, so there's always journal reviews in every session for sure, 1 hour minimum, if not more. So in the session number 4, we'll talk about how to journal and why. That's one of my favorite hobbies, so I will likely be presenting that to you. And then in the remaining sessions, there will basically be a lot of attention to reviewing your journals. Okay, so we will just be going over journal, etc. Just like in the second hour of today, we'll be doing exactly that, so you will have a good idea how that's being done. Okay. And if there's time, of course, we can always look at some live charts. Usually we don't do that, but if there's a good reason to do so, that we will definitely be willing to take a peek at certain trades and talk about them, okay? So first 4 sessions, the first half will be like theory, and the second half will be journal reviewing. Session 5 to 8 is basically reviewing journals. However, there could also be a small presentation of something that's coming up or whatever, okay? So that is basically what we're going to do. All right. Let me go back. Any questions so far on this? Is there any doubts here or any urgent things? Oh, I forgot to say so. 2 sessions every week, Mondays at 11 a.m. New York time, Wednesdays at 12 noon New York time, okay? And the sessions usually last like let's say 2 hours, okay? Sometimes we go a little longer if necessary, if there's a lot of journals, for example, but that is what the schedule looks like, okay? Well, I don't see any questions, so let me move on here. So today, session number 1, as I said, we're going to talk about how to lose correctly. We already did the introduction, right? So we can check this off. It's done, and we're now going to talk about how to lose correctly. And I'm going to focus on 3 main points here. The first one is we're going to talk about max loss per trade, what that is, why it's there, and how to use it, okay? And we're going to look at stock selection. Which stocks should you be trading? And then the third part of this session will be basically about how to find your biggest losses and how to fix them. And basically, I put that together as profits or practice. That will become clear when I talk about that. Okay, and then as I said, Tyler will take some trade reviews. That's the schedule for today. So let's get started then. And let's get started talking about maximum loss per trade. Maximum loss per trade is an important concept that Oliver always points out. It's one of the cornerstones of the whole method. So why do we have max loss per trade? Well, first of all of you know that your account comes with a max loss per day, right? You have an IFT account, a graduation account, and on this graduation account there is a max loss per day parameter, and that is the maximum amount of money that you can lose on any given day, right? As a matter of fact, there are 2 kinds of graduation accounts. Really, one is the one with 50K buying power, in which case your max loss per day is $200, right? And then there is another one called the fast track account, which has a buying power of 100K, and you can lose a maximum of $400 there on any given day. So as soon as you hit that number, basically your account will be stopped, meaning you cannot trade anymore that day. You can only close positions, okay? So max loss per day. Why is that important? Well, because you need to protect yourself against financial catastrophe. For every trader, the most important thing really is to survive, meaning that you should actually make sure that you will still be there tomorrow. The worst thing that can happen to you is that you blow up your account and that you have no more capital and you can no longer trade tomorrow. You cannot trade next week, not next month. You cannot trade until maybe you get an inheritance or you hit the jackpot somewhere and you have new money to put in your account, right? You cannot allow that to happen. So in order to protect yourself against financial catastrophe, you need to put like a cap, a max on the amount of money that you allow yourself to lose on any given day. It's a protection, okay? So that thing is also very important, of course, for IFN traders, because if you graduate, then Oliver will fund your account, and that means basically that you will split the profits, but also what it means is that he will take the losses, okay? So in that case, protection against your financial catastrophe is also an important parameter for IFN traders, of course. So But how do you deal with this? So you get but let's say you have a 50K account, right? And let's say so your max loss per day is $200 that you can lose before your trading will be stopped for the day. So how do you use this money? Do you risk it all? No, you don't. If you want to do a trade, you need to find actually a parameter that you derive from this max loss per day, and that is max loss per trade. So you basically split it up in 2 or 3 portions so that you guarantee to yourself that you can take a minimum of 2 trades or 3 trades. However, you are responsible for sticking with your plan here. So if you tell yourself, I'm going to risk no more than $50 on any trade, then you have to stop to close the trade and stop out on it if you hit the $50 loss, right? So you don't want to risk it all on one trade because trading is a game of odds. What that really means is that there is no way to know which trade is going to work and which trade is not going to work. There's no way to know this. And you also don't know in which order the winners and the losers will come to you. So let's say you risk it all on one trade. Now, it's very well possible that that first trade is a massive stop out. Okay, so you risk, say that you use all your max loss per day money on that one trade, then you're done for the day after one trade. However, knowing that it's a game of odds, that it's a numbers game, what you want to do is make sure that you have a minimum of 2 or 3 trades every day. So if that first trade is a stop out, you get a second chance. That could be a winner. You make back part of the money, or you may even end up profitable for the day on the second trade. Okay, so you need at least 2 or 3 chances every day. And this is why you have to split up your max loss per day into a value max loss per trade. So you have at least 2 chances every day, if not 3. Okay. So what is a good value? So I said we need at least 2 trades every day. So one easy way to go about this is take your max loss per day, divide it by 2. Now you always want a little headroom because it is a value that you do not want to go over, right? If you say I'm not losing more than $100, that means you're not going to lose $101. You have to make sure that you stay below that $100 loss. So if you're approaching that loss, say that you're already $90 in the red, $92 in the red, and you're approaching your $100 max loss per trade value, you have to start closing the trade because there's always slippage, and before you know it, you will lose another $5 to $10, and you may go to $101 or $102, and you're going over your max loss per trade parameter, the parameter that you promised yourself would be a sacred value. Okay, so let's say if you cut it in half and you take a little bit off, let's say that 45%, for example, would probably be a good value. Okay, so so here's a table with some recommendations here, depending on which account you have. So I already said there's 2 kinds of graduation accounts that are being used, right? The normal one, so to speak. The normal one has a 50K buying power. The fast track account has the 100K buying power. And they come with $200 and $400 max loss per day. So that's the parameter, the hardwired parameter that iPhone Traders configures for you. Now, you have to make a choice here. Let's take the easy one first. Say that you decide that you want to be able to do a minimum of 2 trades every day. So what you do there is you take that 45% that I just pointed out, and so 50% minus a little bit. You take that 45%, and that would be $90 if you have a normal account here. Okay. Then what that means, if you want to trade with 2 lots, and this is really something you usually want to do, right? You want to have a minimum of 2 lots. Not all the time. There are situations where you can only afford 1 lot and it's still worth it. We'll talk about that. However, in most trades, you want to have a 2 lot position so that you can take profits on the first lot and let the other one run. That is basically the idea, right? If you have two lots and you have a $90 max loss per trade, then what that means is that you can risk 45 cents on each lot, right? Let me just get this thing off here in a minute. Okay. So you can risk 45 cents on any lot. 45 cents, a lot is 100 shares, right? So 45 cents means you're risking $45. So with two lots, you're risking $90. So that's very easy. You look at the chart, say you're trading a bull elephant bar. Now that bull elephant bar is more than like 42 cents, then there's a problem. You will probably not be able to trade it with two lots, all right? And the same thing, now suppose you say, I want to have at least three trades on any day. Then let's say you go with 30% of max loss per day. So for two lots, what that comes down to is that, well, first of all, so if you have $200 and you divide that by 3 and you take a little bit off, let's say you start at $60, right? So the maximum amount of money that you can lose on any given trade would be $60 here. If you want to trade with two lots, that means that you can risk 30 cents on any event here, all right? So that is basically the idea here. Gourmet is asking, two lots to enter, or are you referring to also one lot to enter and keep a scope of one to add? No, I'm talking about entry here at the moment. Yeah, but also later when you add, you also have to take this into account, of course, right? You have to also use that. That you have to make sure that you're still operating within your max loss per trade, because that is the important thing about max loss per trade. This is a value that you can never exceed. You can never lose more than max loss per trade. So if you're adding to the trade, that may actually have implications for your stop location, and we'll talk about that in a minute. Okay, so let's quickly make the same calculation. If you have a fast track account, so you have a 100K account, IFT will configure it with a max loss per trade, a max loss per day of $400. Okay. Now, say you have this, and you have $400, and you say I need at least 2 trades every day. If you do that, then you divide by 2 and then take a little bit off. So say you have $180 that you can risk maximum on any trade. And if you want to trade with 2 lots, that means you can now risk 90 cents on any event. So if you see a bull 180, for example, or a bear 180, and that bear 180 is, for example, 70 cents, perfect, because you can now buy or short 2 lots here, and you're still operating within that max loss per trade. There is no problem here. Okay. And if you do this with 3 trades every day, then you will be able to risk $120 on any trade. Suppose you have 3 losers in a row here, right? 3 losers in a row. That means you lose 120 max on the first one, 120 on the second one, 120 on the third one. Then at that point you will be minus 360 in your account, but you're still within the $400 limit that IFT is capping your account with. Okay. So this is how it works. You may want to take a screenshot of this screenshot of this slide, perhaps. Maybe it helps you to figure out your own account parameters. All right. So let's see. Any questions about this? Jill Aiton is asking, what is the stock price range for 45 cents or 30 cents? We'll talk about that later, Jill. That's a different subject, what stock prices. Don't worry, it will become clear in probably 15 minutes. Is Paola showing up on your screen? Oh, no, she's not. She's not showing up, but are you there, Paola? Because sometimes traders just disappear. But oh, you are there. Okay, yeah, that happens. Omnovia is a weird program. It's full of enigmas here. Yeah, your screen is fine. Excellent. Okay, let's move on. Okay, so how do we use max loss per trade? So the idea is that as soon as you get close to max loss per trade, you must close your trade, because that maximum dollar amount that you are prepared to lose on any given trade is absolutely a sacred value. Okay, you have to really treat it that way. You cannot allow yourself to go over there, or you will. Basically, what you're doing is you're setting yourself up for a situation where you may be blowing up your account. Okay, and that is something that is a responsibility in every trader, to protect your capital. If you cannot protect your capital, then you should find another job, because that is the most important thing that a trader should be respecting. Okay. So as already pointed out, and somebody asked a question about that, and we'll talk about that in a minute, you have to really think about max loss per trade also when you're adding to your trade, because your stop location may, your stop out location may actually move as a result of that. And is that a good thing? It depends on the chart. It depends on the situation. All right. And the other thing that's important to point out is that we will not be using our max loss per trade for each and every trade. That's not the plan. That's not the idea. It's a dollar amount, right? And you don't necessarily invest that in any trade. There will be many trades where you use a different kind of stop, and you risk less. You don't have to risk max loss per trade on the trade. That's not necessarily the case. You can very well risk less on a certain trade. Okay, but there are some trades where you do want to use max loss per trade as your stop value, and this is something that will be covered in detail in the next session when Tyler presents to you a checklist part 1. We'll talk about initial stop there and when to use max loss per trade as your stop. Okay. Vladimir is asking, is there a minimum risk amount in cents we should not be taking on a trade? Do you mean that if it's less than a certain amount, then you don't take the trade? That you have to risk a minimum amount? Do I understand that correctly? Okay. Not necessarily, but yes, there is something like that, because it doesn't make sense, probably, to trade with a 3 or 4 penny risk. And that is so low that it's likely just it's in a noise area, right? But so it also depends a little bit on your stocks and the volatility of the stock. I would think that like 10 pennies or so seems like a reasonable amount. If you get to 5 pennies, then you get into the noise area where the stock will just go up and down just a few pennies, and it will already take you out. You see, you need some power to your event as well. But there is not strictly a minimum. No, there's not. Okay, so this is max loss per trade. I hope this is clear. Whoop. Any questions to this? Any doubts? I'll just move on. If you have any questions, then just type them in and I'll see them. So let's take an example here. I'm just taking any trade here. This is a trade in Twitter. Okay. We're trading Twitter here, and let's just say, for the purpose of this example, that we're shorting Twitter here. So this is the market is opening here. This is a trade from several years ago, by the way. It says May here, but this is not in 2021. I don't know. I don't remember when this is. Maybe in 2019 or 18 or so. So let's say you short here, and let's say you want to place your stop here. So now what you need to do is actually calculate quickly in your mind. You need to quickly calculate how much risk is this. Now, so let's take a quick look. Let's say we have 80 here, we have 30 here. So this is like 50 cents, all right? Now, say that you have a weird max loss per trade here, $225. This is actually an example that comes from a while ago when we were trading a different kind of accounts here. It doesn't matter. Let's say your max loss per trade for whatever reason is $225, right? Then how many lots can you short here? Well, actually, you could be shorting 4 lots, because if you go 4 times 50 cents here, your risk on this trade would be $200, all right? And $200 is less than $225. So you can short 4 lots here. You cannot short 5 lots here, because if you do that and you place your stop here, you would actually be risking more than you have promised yourself to risk picking your max loss per trade parameter. Okay. So in this case, let's say that we short 3 lots here. We're not going for 4 lots. We just short 3 lots here. So the initial risk on this trade is actually $150. Okay, and that's perfect because it's still less than $225. Okay, PMPO is my attempt to make it to Spanishize max loss per trade, Cynthia. I'm not sure that I ever hit the nail there. Maybe Claudio can tell us if it has any meaning what I put there. But for you, it's just MLPT, assuming that you're an English speaker. Okay. So let's say we go 3 lots short here. Now, look at this. Say you want to add here to the trade. Now the question is, can you add to the trade here? What happens? Because the stop is here, and once you put an initial stop somewhere, you leave it there for a while until there is a reason to move it, right? There's no reason to move it here. When is there a reason to move it? We'll talk about that in the checklist in the future. Okay, next session or 2 sessions from now. So we're maintaining the stop here and we want to add here. So we had $150 risk here so far with these 3 lots, right? So now here, let's say we're adding to this trade. We have 80 here, right? Let's say we're adding at 10. So now we're adding 70 cents risk to this trade. Lot size 100. So that means we're adding $70 risk to this trade, which means that now the risk on this trade is $220. If we get stopped out, if this trade goes this way, and stops us out here, we will lose $220. Is that okay? Yes, that's fine, because this is the value that we had promised ourselves would be the maximum value that we could lose in any given trade. So if we lose $220, then we're just sticking with what we promised ourselves. And that's what discipline is all about. Right? That's what a responsible trader is all about. No problem here. Now let's move and say that we have another add here. So you see this little narrow range bar here, and you say, oh, I want to add there below that narrow range bar. This you cannot do because we already have $220 risk here. The stop is, initial stop is here, and we're maintaining that stop, right? We're not moving the stop down. There's no reason to do that. At least not at this point. And that means that we would be adding another, how much is that? Let's say that we add here and the stop is here. So we would be adding another 80 cents to risk to this trade. And the total risk on this trade would now be $300, right? Which is more than $225. So now we're getting in a problem here. So what does that mean? That means that if you are in a trade like this, your initial short is okay. You could actually add on the second. You could add on the position to the position in this place here without a problem, but you cannot take this add anymore because you cannot afford it. You cannot afford it. Just like you cannot go live in an area and buy a house there for a couple of $1 million if you cannot afford that. Same thing. You'd never spend more money than is wise to do, or take more risk than is wise to do. Okay. So this is something that you guys need to really pay attention to when you take your trades, and you will see that this is very difficult for many, especially for many beginners. You will see in many journals that we'll be reviewing over the next few weeks that this is a mistake that's very often made. That many traders are actually setting themselves up for risks that are much bigger than they are aware of, because they're not taking these issues into account. Okay, they don't really think about it. So you need to train yourself to do this, and each and every time when you see an ad and you need to add to the trade, you need to be aware: can I actually afford this ad? Yes or no? And also, when you start a new trade, you should be aware of the amount of risk that you're taking there. Okay. Finally, so why the little headroom? Pierre is asking, why is there no reason to move the stop loss? Why don't we take profit instead of adding because of the cash limitation? We'll talk about when to take profits and when to move stops in the checklist, Pierre, and that will be in the next session and in the third session as well. Okay, I cannot go into that right now, but I can tell you that that as a basis that you have an initial stop and you leave it there until you have certain goals accomplished. Okay, and what those goals are is something we'll get into depth on that in session number 2 and session number 3 when we deal with the checklist. Okay, so so the 5% headroom, it's very important that you do not go over these values. So if your account has a $200 max loss per day, for example, right, and you get stopped out with a loss of $201, what happens is that an email goes to the IFT trading desk, and they see that you were not respecting the $200 that they had set out for you. Okay. And that's not a good thing, because they want to see that you are capable of preserving your capital in a responsible way. Oliver is not going to fund your account if he feels that you are maybe not being responsible with his money. Nobody would do that. Nobody in their right mind would do that, right? That's a very fair thing to ask. Okay, so this is a way where you can prove to IFT that you are a responsible trader. And so you don't want this to happen. You don't want the system to take you out, because they see that, right? And they will basically add that to your file. Does that mean it can never happen? No, that's not the point. If this happens to you once a month, there's no problem. Okay, because everybody has these catastrophic events. Sometimes you're in 2 trades and suddenly the market turns against you and you're being nicked out of both trades simultaneously. You have no time to close the trade really, and the system does it for you. That happens once in a while. There's no problem with that. But if it happens on a regular basis, there's a problem, because that tells them that you are basically not in control of your risk. Okay? So never forget that. Okay? So if there are no more questions about risk management here, max loss per trade, max loss per day, then we will move on to the next section, which is stock selection. Any questions here? Any doubts? No, I don't see anyone typing here. Okay, all right. Now let's move on to section number 2, which is stock selection. Very important thing: which stocks am I going to trade? The answer is not as simple as you may think. Many people think that it is related to their buying power, that there's a direct relation, that you just see if you can afford it, and if you can buy enough shares because of the price of the stock, and that's okay. That's not the issue here. The issue is very different. The issue is the volatility of the stock. That is really what is the issue when we're talking about what are good stocks for you to trade. And what that means is also that there can be stocks that have low price but very high volatility that will kill you. Okay, but you can also have the other extreme, where you have high price stocks that barely move, and so the volatility is very low there actually. So this is something we have to look into now. What is volatility and how do you look at it? Okay, so little drawing here. The volatility box. This is what most traders like to see. Most traders dream of this kind of trade, right? Get in the trade here, and you take your profits here, and you go to the beach, and you order a cocktail, right? Yeah. Dream on. This is not the way it works. Well, I'm sure most of you have already found out that this is not the way it works. How it works is more like this. The stock does not move straight to that profit take. The stock is actually moving up and down. And what you need to do if you want to trade it to get to this point here, what you need to be able to do is you have to absorb this volatility. You have to be able to use your stops wide enough to absorb this kind of volatility, or you will be nicked out all the time. So what does that look like? For example, here, this is what it looks like in reality. So suppose you're going long here, right? Or here, sorry, in this bar, and your stop is here. Wait, let me do that again. So you're going long here in this green bar, and you place your stop here because you can just afford this, right? Nicked out immediately. Going on here, and if you have a tight stop here, nicked out again. Why? What is the problem here? Well, the problem is this is your volatility here. You see the swings? You need to be able to absorb that. You have to give the stock room to move up and down in order to make it to the profit target. That is the idea. So you need to be able to do something like this here. Okay? If your stock is too volatile, meaning it moves up and down very much, and you cannot really afford this. So say this is a $2 stop here. Okay, so you have $2 here, and you have only an account with a $200 max loss per trade. How are you going to afford this? You can't. So what do many traders do? They want to trade that stock because they love that stock. They're in love with the stock. And as you know, love makes blind, right? So what happens, they trade it anyway, and they put their stop here, and they get nicked out all the time. So when you're selecting your stocks, this is really what you should have in the back of your mind. Can I do nice trades with these stocks? That is basically what you should be asking yourself, okay? And what is a good trade look like? Well, this comes down to the majority of your trades. So I'm not saying all trades, right? You can have exceptions, but you should be trading where the majority of your trades have 2 lots minimum. All right, 2 lots minimum. Because with 2 lots, you can sell 1 lot or cover it on a short and let the other one run. This is how you make profits. If you have only 1 lot, you always have this terrible decision to take. Should I sell it now, or should I stay in the trade? And the truth is, there's no way to know. You cannot know what the stock is going to do in this particular trade. So you're always wrong. You're always out of the trade too soon, or you stay in the trade too long. If you have 2 lots, then you can basically do a little bit of both. So you sell one, and then you let the other one run. Okay, this is why you want to make sure that, let's say 70% of your trades, if not 80% of your trades, should have like 2 lots minimum or 3 lots, but not 1 lot. However, in certain circumstances, you will probably be tempted to take a trade that has only 1 lot. That's okay. If this is a great play and it's really worth it, and you only do this in about 20% of your trades, there's no problem with that. As long as you're aware of the fact that this is an exception. It's the exception to the rule, okay? 1 lot trades are more gambling style than 2 lot trades. The second thing that is important is that you need to be able to have a proper stop on elephant entries and pivots. Remember what I just showed you? You have like, for example, volatility, right? You want to be able to use pivot stops here and afford that. So what that means is that this range here cannot be too much, because if it's too much, what's going on here is that you will not be able to operate within your max loss per trade anymore. So this this movement up and down here has to be reasonable to what's your max loss per trade. Okay? And the same thing with elephant bars. If you are trading, let me give you an example. If you're trading a stock, for example, like Microsoft, and you're using a 50K account. Now, if Microsoft produces an elephant bar at the open, how big will that bar be normally? Anybody an idea? What is a normal value for an elephant bar in Microsoft at the open? Or BABA if you prefer. How big will that bar be? Probably. Anybody? Am I still audible? Yes, I'm still audible. Okay. Patrick is saying $1. Okay, yeah, minimum, I think. I think you will easily have $1 here, if not $2, okay? Now, if you have a $200 max loss per day, and you just made sure that you have 2 trades per day, okay? So your max loss per trade is $90 here, okay? $90. And you really would like to trade two lots, right? Basically, that means you can only afford 45 cents on an elephant bar. Now, if you have a $1 or $2 elephant bar and you have actually 45 cents with 2 lots, okay, you can give up the 2 lots and say, this is such a great play. It comes off the MA 200. It's surging. It's completely solid. There's no wick to the bar. I really want to take this trade. Okay, well, you could have only 1 lot, but if you have only 1 lot, you can only afford 90 cents still. So you're already in big trouble here. If you see an elephant bar, $1, $2, you cannot take it. You cannot take it without violating your own risk parameters. You see? That is the real problem here. Is this clear? This is a very important point. I hope this is totally understood. If there's any doubts about that, bring it up now, because we need to get this out of the way. Everybody has to really understand this. This is the problem. Betty's saying stocks over $200 too expensive. Yeah, absolutely. Over $200 is definitely too expensive, but even below there. But we'll talk about that in a minute. Yeah. Okay. So the other thing here, is you want to be able to add. So if your stock is already very volatile and you can barely take you can barely take 2 lots. In many cases, you have to compromise and go with 1 lot. How do you expect to add to that stock? You can't, because in most cases, you will already be fully loaded when the trade starts, which makes it, again, more of a gamble play. It's just, it works or it doesn't work. If you can add to the trade, this is when you're really becoming a trader, right? By adding and reducing to the play. That's when you're really trading. So that is what you need. You need like majority. This is the important keyword here. Majority, not all the time, but in the majority of trades, you want to be able to have 2 lots, have a proper stop, and have room left to add to the trade. That's the idea. So Pierre is asking, how do you determine the volatility of a stock before adding it to your watch list? Well, we're going to go over a couple of slides here, Pierre, and I think that will actually answer your question. Let's take a quick look here. I have an example here of a stock that is, for some reason, seems very attractive to a lot of novices, and that is Roku. Roku, many people love Roku. Roku is a killer stock. Now let's take a look here. What's going on here? So we have our fabulous 4 here, right? I think most of you are familiar with the concept. If not, it will all be explained in detail in the next session. Now let's say we see this beautiful bottoming tail bar here at the open, coming right after the Fab 4 here. Great trade, right? Beautiful setup. Very nice. Point is, you want to go long here. And the problem is that this here is already, look, I put the exact numbers here, 34 and 13 here. So we already have like $1.25 here on this single bar here. And then this is also a very spready stock. So you should easily add 10 cents just because you're eating the spread when you're going long, right? Because you're going long using an alt key. So you're eating the spread. You're just paying whatever they ask for it. You just want to get the heck in. So let's say you need like $135 here for one lot to finance one lot in this trade here. Okay. Now these values are actually wrong here, and I should really change that someday. Always forget. But let's say you have a 50K account. Your max loss per day is $200, and you gave yourself $90 here as a max loss per trade, as we just discussed, right? You want to have 2 attempts guaranteed every day. See, you cannot do it. You cannot even afford one lot in this stock. And this comes to answer your question, Pierre. This is what you should be looking at. When you look at your stocks, go through a couple of dozen opens, okay? Just go back to whatever, go back to the 1st of April, for example, and from that day on, go to every day and check how they open. What is this bar? Is there an event here that is an event that you know you should be playing? And if so, just see how much is my risk on that event. Can I afford a trade here? And not just any trade, but can I afford a trade here with 2 lots, with a proper stop? And is there even room to add? You should ask yourself that question. And if in most cases, or in many cases, you find out that your stock, you cannot do this, then just stop trading this stock. Kick it down. You cannot afford it. You need a bigger account. See? This is how you should look at it. So Roku is one of those notoriously dangerous stocks that kill a lot of traders. And here's a different one. This is also one that is loved by many people because they are in love with Facebook. They love this stock. But the stock this is a very old screenshot. Also, it's like 2 years old. It's now trading over $300, if I'm not mistaken. I don't know. I don't trade it, but I think it's over $300 right now. Now look at this. You have your Fab 4 here, and here's your opening event, right? This is a topping tail bar. Sorry. This looks a little bit like MU today. Maybe some of you were playing MU today. There was also a topping tail bar there, but look, this is Facebook doing the same thing. Now look at, oh, Paula, did you get stuck in that one? It didn't look very nice. So, but it happens. Now this is a great bar, right? This is a great event in a great location. So this is the kind of thing, if this is a stock you are watching and you see this event, you want to play this, right? Now let's see. You want to short here. This bar is $2, right? It's $2. Maybe today on above $300 is actually $3 on this stock. I don't know, but this is $2 here. So if your account, now let's assume you have a fast track account, right? Forget about this part here. Let's just do this. Right. Fast track account, $400 max loss per day. All right. Now you say I want 2 trades every day. So let's say your max loss per trade is $180. See that? Now here already you would need $200 to trade this beautiful event. So now you have in your stock is finally giving you a beautiful event, right? And what happens? You cannot afford it. You can't even play it with 1 lot. And maybe if this was a little less, maybe you could just afford 1 lot in it. But you're not trading there. This is more like the gamble style of trading, right? So don't get me wrong. I'm not saying 1 lot trading is gambling. That is not what I'm trying to say. But I'm just trying to drive the point home here that you should be willing, looking for stocks that you can trade with 2 lots most of the time. If you find that this kind of beautiful event in a beautiful location, that most of the times you cannot afford it, then this is not your stock. This is not your stock. Leave this for other traders. Go look for something else that you can actually trade. Okay? Does this answer your question, Pierre, by the way? I hope it does. So, so what you see here is, because let me show you also the next sheet here. Maybe this clarifies it even better. This is trading. Look, here we are trading, because now this trade here, look, trader can actually afford 2 lots here. That's what now we're talking, right? Because with 2 lots, we can later sell one and let the other one run. With a decent stop here, this is an elephant bar here, see? And this is an event stop on the elephant bar. This is decent because look, we have here 77, okay, and the stop here is roughly at 50. So this is 50 cents. So with 2 lots, we have a $100 risk. Well, it all depends, of course, how much is your max loss per trade. This trade would even be problematic on a 50K account. However, on a fast track account, a 100K fast track account, you can afford it. There's no problem because your stop max loss per trade is probably $180, as we saw, okay? And then you see that actually 100 is less than 180, okay? So here you see how you can have 2 here, and you can actually take your profits, sell part of your inventory here. You could even be adding to the trade here if you wanted to. There's still room to do that, and you can actually sell some more. This is trading, right? This is trading, okay? So finding the right stocks there's no simple formula for that. What you really have to do is you have to be aware of what the real problem is. The problem is the volatility of the stock, right? Not the price of the stock. The problem is the volatility of the stock. And then you should basically go over a lot of those stocks and look at all the opening charts there and for the last month or 2 months, and just ask yourself the question, whenever you see a nice event at the open, can I afford this trade? And if you find that you can afford this trade in most of the cases, then it's a good stock for you. If you find that whenever you see a nice event there that you cannot afford it, or maybe you can just finance 1 lot, then this is not a good stock for you. All right? Okay, so quick look. Say you have a 50K account here. Now, there's one thing that I forgot to point out, is that there is a relation, of course, between volatility and stock price. Overall speaking, the more expensive the stock, the higher the volatility, but not necessarily so. It's not necessarily the case. There are some stocks that are lower priced and can still be very volatile. For example, Snap Snap as an AP can be very volatile, but it's actually priced in the $50 range, right? MU can also be very volatile at times, but it is, what is it priced at today? I don't know, $80 or so. I'm not very good at remembering these numbers. In some cases, MU can be more volatile than Apple, actually, right? So this is why there is no simple answer to this question. And what you really have to do, you have to do some work here. You have to do some work. You have to really sit down and go over these stocks and look at all those charts so you become familiar with the stock and you feel comfortable with it. It will not surprise you. If you go over 2 or 3 months of openings with MU, for example, then you will have a pretty good idea of what MU does at the open and how big the risk is. So if tomorrow you see an MU event and you want to take it, it will probably not surprise you. You are already coming prepared, okay? So when looking for these stocks, then you should look in this price range roughly. So if you have a 50K account and you want to be able to trade with 2 lots and have a decent stop and maybe even add, you should definitely not go above $60 to $80. It's unlikely that you will be able to trade there, okay? Don't go below 25 though, because 25 is like, below 25 things get really noisy. There's a lot of crap there in the stocks. They don't really move that nice. One of the stocks that always moves very nice is Apple, for example. The problem is Apple is above this price range here, okay? It's a problem. Below 25, you will be seeing a lot of erratic moves, stocks that don't move at all, that have a volatility where you may be happy after an hour if it has moved 10 cents, you know, that's also, of course, I mean, that's not why we're here, not to see the stock move 10 cents in an hour. Right? You probably don't want to trade that stock. So the bad news is that you cannot trade any of these stocks really in an account, in a 50K account. Forget about it. If you are trading any of these stocks, just forget about it. What you do want to trade are the stocks in this area here. Okay, like eBay is a very nice one. Twitter can be very volatile as well. Dangerous, can be very dangerous. Cisco is, I think, is very moderate. Oracle is a very peaceful stock as well. Morgan Stanley here. C is already, I don't know. I think I would, this sheet was made, of course, a while ago. I would take it out here, I think. I think it's for 50K account. C is already a little on the edge here. And UAL is also doubtful, I think. Yeah. But you have to really do this for yourself, okay? It's not like this one is good and that one's bad. No, you have to find out for yourself. That's the way to go about it. Now let's take a quick look also at what kind of stocks to trade on a 100K account. Still never below $25, okay? Just don't do it. It's just a mess there. Now maybe you can go maybe as high as 125. I mean, you can trade Apple on a 100K account. That is okay. You can do that. Apple is a very decent stock. But still, these big guys here like Facebook, Nvidia, Baba, and of course Roku, and so forget about it. Yeah? Too volatile. Too volatile. So you can still trade the same stocks that are also that are also good to look at for a 50K account. You can also trade on a 100K account, of course. There's no problem with that. But now you can also trade stocks like Apple here, JPM probably. Oh, JPM is also has already become quite volatile. Maybe you want to take this out, and this is a good place to put C in, Citibank, instead of JPM here, for example, okay? And Snap is quite volatile, but in a 100K account, you can definitely trade it, and NIO, stocks like that, okay? Ask other people also, what are you trading? So you get ideas here, right? SQ and PayPal, yeah, same problem. SQ and PayPal are very volatile as well, and they're well over $200. I wouldn't trade them on these accounts. You see, the point is, I'm not saying that there is not a single trade you can do there. This is not the point. Of course, there can be a great RBI there, and the risk is 50 cents, right? And you take the RBI and you make a huge trade because it moves up to the $3. That happens, of course. However, in your stock family at the open, is that what you want to do? Sit there and hope for an RBI somewhere? Or are you actually going to trade other events as well? If you want to be able to trade elephant bars, bull 180s, tail bars, RBIs, then in those cases, then stocks like SQ and PayPal are just too volatile to trade. See? So that is basically the point. I'm not saying there's never a trade that you can take there. I'm not saying that, but I'm saying that if you're sitting there at the open and you have your stock list of 6 to 10 stocks there, then maybe you want to make sure that the stocks in there are able to present trades to you that you can actually afford to take most of the time. That is the point, okay? Marilyn Brown is saying, don't you have to stay in Oliver's 50 stock list? Yes, you should do that, actually. You should do that. Yes, that's a good idea. I believe even that if you trade outside of those stocks, 50 stock list, that maybe those trades do not count for graduation. But I'm not 100% sure about that. Okay? So I hope this clarifies. Thank you, Paula. Paula's confirming what I just said. Yeah, thank you. So I hope this clarifies the issue of stock selection and why it's so important. Why it's so important. Where do you get this 50 stock list? Wait a minute. Isn't that maybe? No, it's not. Oh, yeah, it is. If you click open the window at the bottom right of your Omnovia window, there's a folder icon, right? If you click on that, you see a couple of files there, and the fourth one says IFT 50 Index 2020 stock. See that? You can download that. That's where it is, and then you have to put that in your IFT Pro folder somehow. I'm not sure how that's done, but you should figure that out, or you can go to the support room and ask for help there. Okay. So anybody who wants to have the 50 stock lists IFT stock list, it's in the folder attached to this window. Okay. Betty is saying fast track is not limited, right? Not limited in what sense? I'm not sure what you mean by that. I mean, you have your max loss parameters there, etc. So not limited to the list. Oh, I'm not sure about that. I'm sorry, I don't know the exact intricacies of all these graduation programs. How often does the IFT list get updated? Not very often, Dennis. I think the last time was last year in October or so, and that was the first time that I saw an upgrade to that, or that was mentioned to me in at least 3 years or so. So it's not very often. No. Okay. All right. Anything else? No, I think I covered all the questions there, right? Okay, cool. So, any doubts about this, or is this clear now? Does everybody understand the problem here? Can I get a yes or no? Some feedback, some interaction here. Good stuff, Dennis. Okay, thank you. Yes, clear. Yes, okay. No doubts here. Excellent. Okay, then let's move on to the last part of my presentation today, and that is about, well, I call that profits or practice, and I'll show you why I'm calling it profits or practice. So, you should ask yourself, and this is not a question that you can probably answer. Many of you will not be able to answer that immediately. You have to think about it. But you should really be asking yourself, what is actually your short-term goal here trading? What is it you are trying to achieve here? What is it you're trying to do? Are you trading today because you want to make profits? How many of you are trading today because they want to make profits? For how many of you is that their short-term goal, their goal right now? I'm trading here because I want to make profits. Jill Ayton is saying yes. Vladimir also. Simon just wants to get it. Gurmit has a different thing here. He's here to learn and practice. Okay, interesting. Okay, Alex says yes. Okay, qualify for funding. Okay. Gregory's not here to make profits either. Okay, cool. No, this is okay. If you want to make profits, right? If this is why you think you're here, you're going to make profits, then what should you do? Because this has implications for how you approach the market. The first thing you should be doing here is you should not take any trades that you haven't mastered yet. If you are not familiar, for example, with trading, let's keep it simple. If you're not familiar with trading against the position, right? So meaning that you're above the MAs, but you're going short. That's against the position, right? Because above the MAs, you will probably predominantly want to take long trades. And below the MAs, you will probably predominantly want to take short trades, right? Now, if you are trying to be a little bit fancier, you may want to go against the position, say, okay, I know I'm above the MAs, but you know, this is a great short. I'm taking it anyway. I'm good enough to do that, right? If you have not really mastered that, though, you should not be doing this. By no means, because remember, this was your goal. You wanted to make a profit. So why would you start doing something that you haven't mastered? Why would you go on a dangerous track here and actually lower the odds of you being successful? You can't do that. So you have to avoid those trades. You have to avoid any losses there. Anything that looks remotely suspicious, like something that you don't really know what you're doing, you should stay away from that. So basically, this is your mantra here. Your mantra is, when in doubt, stay out. This is a very famous one, right? This is a very famous thing that everybody always says. Everybody outside from trading always says, oh yeah, when in doubt, stay out, right? Now, however, if you are here with a different attitude and you say, look, I am not a good trader at this point. I want to become a good trader, but I'm not. So what do you need to do? You need to basically give up trying to make profits here. Just stop it and start to focus on something totally else. Start to focus on practicing. Okay? And forget about making profits. That's something for the future. First, you need to practice and master your trading. Now, if that is what you're doing, now suddenly you have a totally different approach. Look, first of all, you should be taking any trade here. Anything that you think is a trade, you take it. You don't care whether it's a loss or a win. It doesn't matter because you need to get it out of the way. The fact that you think it's a trade means that you have to try it until you have finally learned that maybe this is not a trade at all, because you just fell. It's like walking when you're a young child, right? You fall many times before you can do it. So maybe you need to actually experience that. Take the trade, get it out of your way, get all those losses out of your way. Just find out how many ways there are to lose money, okay? And get them out of the way one by one. That is what you should be focusing on. Don't care about the profits because you need to build experience. Experience is the only way to become successful. Knowledge is not going to help you out. Knowledge is just an ingredient that you can use to start practicing and building your own experience. That's the only way to become successful. So basically, now your mantra is completely the other way around. It is actually, when in doubt, do not stay out. Do you see the difference? This is quite different, isn't it? So this is why I'm raising this question here, and I want you all to really think about this. Maybe you want to take a long walk and think about this, something like that. So you have a clear answer for yourself. Many traders cannot decide here what they want to do. They're constantly going back and forth here. One day they're practicing and then they think, oh, I can do this. I'm going to, I'm there. I'm going to make a profit today. And then they fail miserably here again, and then they're depressed and they go back again to practicing, etc. They go back and forth, back and forth. That's not the way to do it, okay? So think about this. Think about this and understand that this is actually a dilemma that you need to resolve for yourself. You have to make a choice here, okay? So, let's take a look at that, how to deal with this. Because in a way you can do both. It's not necessarily so that you are just practicing and you're not making any profits, or it doesn't have to be that way, okay? I am only trying to make it really clear to you what the problem is, and that you have to think about, where do I stand here? Now, let's try to do a little bit of both here. Dennis already says he would like to do a hybrid of both. And in a way, you can do that. Now, let's take a look here. So what I suggest is, first of all, you need to accept that you're not a good trader, because if you're a good trader, you wouldn't be here, right? Let's face it. The reason why you're here, because you're not a good trader. Now, okay, that out of the way, that means that you need to focus on practicing. That's your most important thing. That means you have to take all the trades and you have to go for when in doubt, do not stay out. Now, at the same time, though, you can work on your profitability while you're practicing. And how can you do that? Well, first of all, you need to decrease your losses. I think everybody here knows how often maybe you have 2 or 3 small wins, and then there comes this massive loss that wipes it all out, and even a lot more than that, right? This is how your account goes down, right? So you make a couple of small wins, and there's your loss. And you win a little bit, and another loss. You get something like this, right? You go deeper and deeper, and you're digging deeper and deeper and deeper. And Patrick doesn't recognize any of this. Okay, Patrick. Yeah, well, I think you're the only one, Patrick, because everybody is silent. So, no, of course not. We all know what this is like, and we've all been there, and many of you are still there. So in order to decrease those losses, what do we need to do? First of all, you need to start keeping track of your results, okay? Very important. And you need to also analyze those results and use them as feedback. So this is the work part, again, of trading that most people don't like to do. They're just sitting there and just hitting the buy and the sell key, hoping that tomorrow will be better. Well, it won't. No, you need to work. So you need to really look at your trades on a daily basis and try to progress by analyzing them, okay? And decrease those losses. And we're gonna talk about how we're gonna do that. And the second thing is you need to increase your profitability. How many of you are in a trade and then get out of the trade only to see the stock move another dollar up or down, but you're out of the trade? I'm sure that also never happened to you, Patrick, right? Oh, now you're in good company. Carlos has it too. Yeah. Well, even Tony has it happen to you. Now, see, that happened. And it happens to me too once in a while, of course. Of course. Much less than it used to be, though. But sometimes it's a little problem, right? Okay, now it's getting cozy here. Now we're all on the same frequency. Okay, so how are we going to make sure you can increase your profits? Well, basically by teaching you the checklist. Part of the checklist is a very sophisticated stop maintenance plan, stop adjustment plan, a profit taking plan, etc., designed to keep you in the trade. Now, that sounds like the miraculous solution, right? Yes, it is. The only problem is it's easier said than done. It's not easy to really do it, and you need to practice this. Okay. So anyway, to get back to this, so yes, we're going to practice. However, we're also going to work on our profitability. And how do we do that? First of all, by making sure that we decrease our losses. We're going to get our biggest losses out of the way. And second, that we stay in trades longer so that we increase the profits. Okay, less losses, more profits is what we are practicing. Okay, so kind of solution to the dilemma here. Now, what's the plan of attack? So why is your P&L actually negative? What is the main problem there? What is the main problem there? I've already said it, but still good. Can you type that in for me? Why is your P&L negative? What is happening all the time? What is the key problem here? Losses bigger than wins. Yeah, right. Risk, no plan. Okay, don't take stops. Lots of answers here. But I like what, no structure. Okay, yeah, right. Well, and you're home here, Marilyn. We're going to teach you some structure here. Don't worry. Bad trade selection. No, the main issue is, why is your P&L negative? Because your losses exceed your wins, like Betty just said, right? And in other words, you can put this different. You win small and you lose big. Isn't that the main problem? Small wins, big losses. Now, if you keep doing that, then of course you're digging a hole all the way to China, right? So, what do we need to do here? If you know that this is your problem, then what we need to do is actually we need to start working on eliminating the biggest losses, not all the losses. This is a mistake that is often made, and I saw that again the other day in one of the Facebook groups, somebody saying something about that, how they were very much on very tight stop management, etc. Basically trying to avoid any loss. That is wrong. You have to accept losses, but you should not accept big losses. Not accept big losses, at least not unnecessary big losses. There are lots of those, and that's what we're going to look at. Those come from bad entries, taking trades that are basically have very low odds, okay? And the other thing that we will see many times is position size too big, meaning that max loss per trade is not respected. I already mentioned that before. We're going to see a lot of that in the next couple of weeks. We're going to see a lot of your journals, as we are dissecting them, we'll find out that you are actually violating your own max loss per trade parameter over and over and over again. Okay, so when this, the problem with that is also that if everything goes well, you won't notice it. You can actually make a home run. You make a great trade there. You'll make a fantastic win there because you actually took a risk that was out of this world. Right? It was crazy, but you weren't punished for it. But then next time, you get punished for it. And the market takes it from you and blows you out of your account. Okay, so that is going to be something that's coming back all the time, and I'll remind you. So that is going to be something that's coming back all the time, and I'll remind you of that when it happens. And the other thing we're going to do then is, as I said, enhance your winners. So we're going to talk about things, this is checklist stuff, when to add to the trade, when to take profits, and when to adjust your stop so that you can actually stay in the trade as long as possible and make sure that when you have a winner, that you actually milk it also to the end instead of being out there too early. Okay? This is the plan of attack. Now, with this said, we're going to conclude this part for today. So profit taking and stop adjustment and all this enhancing stuff, that's next week and the week after when Tyler talks about checklist stuff. Today, I'm going to introduce to you this little sheet here. This little sheet here, and you can actually download it right now. I'll also attach it to the email with the recording. But if you look in the folder attached to this Innovia window, then you will find there's one there, 20 trades minus 5.pdf. Do you see that? So the folder on the right bottom of your Innovia window, click that open, and the top one says 20 trades minus 5.pdf. If you download that one, that is this form here. Okay. So the plan is, what you're going to do is you're going to collect all your trades, and you just write them down. Basically what you write down here is, let me just do it immediately on the next sheet because it's more clear here. So what you do, you write the date, the time, the stock, okay, that's the most important thing. Maybe you want to put the time frame. Forget about this part. You can fill it in if you want to put the event, the location. If you know what that is, then it's okay. Otherwise, forget about it. And then you put in the profit and loss to the trade. This way, you collect 20 trades. Once you're done, and you have collected 20 trades, then here's an example that somebody sent in a while ago who took this exercise. And then you look for what is my biggest loss. And here he has it, right? He lost $182 here on the second trade. So now the idea is that we're going to find out what is the cause of this loss. Did he make a mistake there? Is there something that should be avoided in the future? And if we can find that, then we write that down here at the bottom. You write it down, and now you bring it to the next set of 20 trades. So you focus on avoiding the error or mistake that you made here, and that gave you this big loss. In this particular case, for example, this trader, what he did was he was adding too many lots, and he forgot about his max loss per trade and blew right through it. Yeah. So, so that is the plan of action here. We are going. No, what you need to do, what you are going to do is collect these trades, find the biggest loss, and then you make a journal of that trade. So once you have 20 trades here, you make a journal of this trade, and then you send that in to us so we can review it here in the session. We'll do that. These trades, if you mark it as a max loss of 20 trades, it always gets priority. Okay, we review that one first. And then hopefully you can learn something from that so that you can now avoid this mistake in the future. If you do this, if you do this like 3, 4, 5 times, so over the course of the next month, you will have been able to eliminate 3, 4, 5 big reasons for unnecessary big losses. Okay, so you will have decreased your losses there. Is that clear? Do we want this 20 trades starting today or our past 20 trades? No, start today. So today, maybe you took 2 or 3 trades. Start filling this out immediately as of today. And then tomorrow you add to it, and then Wednesday, etc. until you have 20. As soon as you have 20, you look for the biggest loss, you make a journal, and you send it in to us. And we'll dissect it here in one of the sessions. That's the plan. Okay? So this is your homework. Actually, this is your homework for the next month. Because this does not go away. Just keep doing this, right? It's very helpful. I really recommend it. You see, there was another question somewhere. There was another question. Dennis is asking, when collecting trades, should we track re-entries or adds and opening trades only? No, you take any trade, meaning from position 0 to position 0. That's one trade. So you start with 2 lots, you add 1, you sell 2, you add another 1, you sell, and then you stop out. That's one trade. Okay? Betty modified the 20 trade sheet. Would you like me to send it to you? Yeah, why not, Betty? Please send it in and we'll take a look at it. Maybe it's better than this one. That would be great. Then we will just replace it. All right. So then, any other questions? I do not have access to this sheet, Pierre is saying. Pierre, do you have the little icon on the bottom right of your Omnovia window there? Because if you click on that and the box pops open, you should be able to see it. Well, if you don't, it's not a problem, because I will attach this sheet to the recording as I send it out later today. Okay, I'll send out an email later today, but the recording for this session, I will just attach this sheet so you can get it from there. All right. And Niaz Hussain is saying, do we send our trades for you to review? Yes, please. Yes. So you can send any trade you want, but especially the big loss trade, the biggest loss from 20 trades. That's especially because you want to get those losses out of the way, right? So you need them reviewed. So send that to us. You can actually use the email address. When I send out the recording, you can just reply to the recording. That is the email address. Everything is coaching@iPhoneTraders.com. Coaching@iPhoneTraders.com. Just reply to the email with the recording, and it will get to us. No problem. Okay. Gurmeet Singh is saying, is TF the lots taken at start or including the additional later in the trade? TF is time frame in this as a time frame column, so 2-minute or 5-minute time frame. But it's not important. What's important here is only date, time, stock, and profit and loss. That's all that's important here. Okay. How do you add text to label the charts? That is journaling. We'll talk about that in session number 4. Okay. But you can basically take a screenshot and use some Windows tool to write on the chart, Patrick, just to figure that out. Okay. Vladimir is saying, can I use the Trading Journal Pro for creating this list? I don't think so, Vladimir. I'm not familiar with Trading Journal Pro, unfortunately, so I'm not sure. But just take this list and just fill it in. The best thing is really to just print it out and just fill it in by hand. Just take a pen and just write in it. Okay. Just don't make it more complicated than it is. Just fill it out. Have it next to your computer. Okay. Thank you, Patty, for sending the sheet. Yes. Okay, right. Anything else? Pierre says, I only have access to Control Center, not the other one you said. No, Pierre, you are now looking at a window here, right? You see with the names on the left here, the window you're now talking to. I'm talking to. Let's put it that way. If you look there at the bottom of that window, in the bar at the bottom on the right. Oh, look at that. Oh, Paula, always so helpful. Thank you, Paula. She's just posting it here. Why didn't I think of that, Paula? Thank you. That was brilliant. Okay. Yeah, time. Yeah, we're through. So, okay. I have nothing to add here. So download the sheet. Fill it in, make a journal, send it to us, and that's it. Okay. So that concludes my presentation. Yeah, I got a little overboard here. It's a little longer than usual. I apologize, Tony.
Never happens, yeah. Never happens.
Tyler, you can take over.
None of us ever do want to. All right, sound check, guys. Can you hear me? It's time for me to steal the screen share. Thank you, Jan. Good job getting us going. So let's see here. All right, hello, Paula. So, Paula, you've got 90 minutes, right? I'm just making sure. Hello, Dennis. Screen sharing. All right, so welcome new people. Give me a 1 if you're new today. Just type it in there, helps me figure out. Right, Patrick, Cynthia, Vladimir, Jill, Yaz, Pierre. Right, good stuff. All right, are you excited? You guys excited to be here? Lawrence. All right, good stuff. Yeah, right? So we want to get you onto Oliver's famous checklist, and, you know, I think Jan did a really good job of kind of explaining where we're going with that. Get you motivated, get you on the right track, add this structure. And what we're going to do is we're going to go over some journals, which we do every single time. And so you can see what the other traders are doing. If you can't, okay, thanks, Tony. You can't understand some of the notations here, well, that's what we're going to be teaching you in the next few weeks, right? This is part of how we make this objective for you. And right now, Hamsaraj has sent us a trade from Uber. Identified a bull elephant bar. I think this means this is supposed to be a minus location, not a plus location. Event stop was placed, shorted 2 lots right there, according to the plan. We've got a 3 push profit take, right? So we'll call this 1 right here. We'll call this push 2 right here. And anything below that is the 3rd push. So profits were taken here. Something here happened at 3. I don't know what happened right here at 3 because I can't see. Yeah, I can't see, but my guess is that the stop was moved to break even at 0.3, which makes sense, right? So if that's what happened, you could say that either the stop came to here as like the solid bar stop adjust, meaning the stop came from here all the way down to the solid bar, or it came down to break even. Break even is acceptable when? It's acceptable when a 50% pullback would still, so let's say this is the 50% area from your stop to the low. 50% pullback would still be below break even in this case. So maybe that's where the stop was, I'm not sure. Now, the comment is made, I don't think this is a pullback ad. Please comment. I tend to agree that's not 3 bars. It's kind of far down here, but you know, the checklist actually does say, right, first pullback, whatever that is. It's not 3 bars though, right? And I think it's fine to say maybe I'm not comfortable adding here because the probability of it getting up here is just much higher, right? At a certain point, you know, it needs to do this, and that's really not the first pullback. This one has just shot many bars down. It is a small pullback, but I don't think it's not 3 to 5 bars. This is just like a 1 to 2 bar pullback. It does make a new low, right? And I think this new low does justify this stop adjust right here. So, and at this point, bar by bar was taken. So right here, not losing that new low, I think makes sense, right? So closing the trade right here, I think that's an excellent trade, and I think that's a good time to get out. So I think that's a really cool trade right there. Well done with that on Uber. Now, Dennis is asking also 3 push should not have an overlap, right? A push is just a progression without a pullback hesitation. A push has to have solid color that moves beyond the prior bar, right? Solid color that's moving beyond the prior bar, right? And I think when you put these two together, you know, you have some solid color here. Calling that 1 push is okay, right? Because if you look, it's moving beyond this bar, right? So here's 1 push of solid color. Here's a 2nd push of solid color. And anything beyond that, you know, it may end up pulling back later after you take your profits. It doesn't matter. You're on your 3rd push. You're allowed to take it. I mean, that's why the 3rd push is important, right? You don't know how that bar is going to close, but you get into that 3 push territory, you have a right to take some profits. So that's really nice. And I would, if these bars look different, if they didn't have any solid color in them, like if they just looked like this, just a line with that, I would not call them a push. But there is color there. So we can give it that definition. Yeah, the tails can throw you off, right? So like if it was just this bar here, I wouldn't call that a push. But for the purpose of profit taking, if you're getting into your third bar and it's beyond the low of this push, then it is something that you can say, now I have the right to take profits. Does that make sense, Dennis? And this is interesting down here. This is technically a pullback new low whale complete. It is. It's just not an ad, right? It's just not an ad to me. Why? I mean, look what it's doing to your risk if you're adding here. You're far below the 20. I would call this like almost a double space, right? So here's 1, here's 2. All you've got is 2 bars. That's not enough to call it a pullback. You need to have at least 3. But it is a move into the prior leg down, right? And then a new low. And that new low, I think when you're getting this distance and this kind of double space, I think it's okay to, that's your whale complete. I think it is okay to call that a whale complete. Which is interesting, isn't it? It's not exactly a pullback, but this is just, it's moved a long way. Am I wrong in that? Is there anything I'm missing here, Jan or Tony? Like, this is kind of one of these hybrid situations where like your whale complete is just like this little snap back into the last leg, new low, 180. Okay, I think it's okay to be done there. Right? It's just not the, it's not an ad though. It's just not a good ad. If you're going to take this ad, you're preparing to like just ding it real fast when you get down here and take it for a quick 30-cent drop or something. I just, it's just that, it's that zone where we're kind of getting way beyond expectations and a strong pullback is likely. Now, this, if you're still in the play, if you don't move your stop here, which I believe the checklist forces you to bring your stop down here, but if for some reason you were not, here's one ad, and eventually that break-even stop would get you. It's just, it's roaring back at you, right? Like this thing is going to roar against you because of the distance from the 20. So it's not likely that you're gonna go anywhere with that. So I think this was handled very well. Yeah, it's just not really a pullback. A pullback, you want to have 3 to 5 bars ideally, and go from there. So I'm going to move on from this one. Let's see, Jan's typing here. See if we have any other comments. I do appreciate the discipline here, just waiting, taking profits. It's nice when they happen all according to plan. Like, look at this fabulous 4 here, right? That's definitely a narrow state, right? There's no confusion there. All of it is in a 20-cent range. So you have to take it, right? There's no thinking about it. There's no calculation. There's no like consulting the oracle or anything like that. You're just like, I have to take this. Right? Boom, in. And that's something we're going to explain when I go to the first part of the checklist on entries. When these things line up, you don't choose whether or not to enter. You go type fabulous 4, right? Bear elephant bar, 2 lots in, and then you have either event stop or max loss per trade, depending on what your risk parameters are, which we will define. And then there's nothing, you You don't go, maybe I take this, maybe I don't, maybe it's going to win, maybe it's going to, you don't care. You have to take it. You don't get to care because you don't know if this is the one that's going to do that or if it's the next one. But it's based on odds. Every time you see this, every single time you see this and you get a nice event like that, you are taking it. And you're going to do this thousands of times until you get experience, right? Until you gain experience. So that's cool stuff. Now, Michael wanted to tempt the fates here with the trap zone. We have seen so many that look like this, where we get something right here on the 200. We've got shaded in here as our fabulous 4. And let's see. So I'm going to go over the comments here. Saw the reversal of green getting taken out and forming a bear 180. I did not want to respect what I was seeing, and I knew to get out with a break even or small profit, and could have, but my ego got in the way. 2 color removal also happened. Okay. So looks like the first thing we did here was a short entry, right, Michael? So yeah, I know there's been a lot of those lately, and it's just that time where it's sometimes better to wait if you're trapped, right? This one is still trapped. It looks like it wants to break down, and you went short here, and then it looks like we went stop and reverse, right? Is that correct? This is a stop and reverse here. And then I think you were actually smart in taking some profits here up at the top, but you didn't close the whole thing. And then you added here, right? You added here after this thing collapsed on you, and then ended up stopping down here, right? Everyone see what happens? We went short here. Then the entry bar was wiped out. Flipped the trade long, took some off, bringing it back to break even, got excited and hung on, and then this thing went smashed right back down. And instead of accepting what was happening, Michael said, hey, we're taking out the high of this little green bar, and maybe it'll bounce way up, and instead it ended up stopping out. When really what this crash here said, no, we're not going up. Now, this is, at what point do we know that this is trapped? Well, I think right here, this, first of all, we have slide after slide after slide of stop and reverses happening inside this mess of the trap zone, and it just doesn't work. It doesn't follow through. It doesn't go anywhere. You were lucky to get to the top and take some profits, which I think was a great idea, and trying to hang on with that last lot. The problem is this. Once this doesn't continue, we just now have a trap zone that's this big instead of this big. That's all it is when it doesn't clear here. You guys following me? It's just like, yes, I know violence wipes out everything, blah, blah, blah. But you know the violence that doesn't work? It's this one. This is the one that doesn't work. Like, this should be burned into your retinas here. This is the one that time and time again, violence needs to just smash this whole area. Like, and I don't know how to explain it. It's because it's not only a trap zone here, it's a narrow trap zone. It's just a narrow trap zone, right? It's the narrow ones. The violence in a wide trap zone, that actually does tend to follow through. I have to say that one tends to follow through. And like, I know that this is like, here's a violent red bar right here. Here's a pullback that turns into a wipeout, and people might say short here. Nope, I don't care. I start to like this maybe down here once we've cleared this area, and now we're like losing it. Now I start going, this could follow through to the downside. But even here, even right here, I still say it just hasn't broken the 200 yet. And could it go this way? Yeah. There's just nothing clear about it right here. But I do think that losing this green and then this right here and clearing below all that, I think that's good for a couple of pushes. But I don't know how far that's going to go. I think that's when this is the point where we finally break out of the zone, because we have a number of bars that are trying to decide what to do. What I don't like is a 1 to 2 bar peekaboo on the top of a tight zone like this. 1 to 2 bars doesn't do it. So I'll tell you what I would need. I would need this green bar to like close up here. I want it to be so clear that we have said goodbye, that the next bar just like is going to find that to be support. See what I'm saying? Yeah, and Simon's talking about this. Is it because of support or resistance? Yes, it is. It's just like all these, like, and I might even say this. There will be a time of the year where we might even say the opposite thing about this. Well, what time of year is it? How are the markets trading right now? Yeah, we're getting that summertime baloney. It's early, right? Yeah, it's summer all over. I mean, I can tell. We're already getting the red flag warnings here in California. It's just earliest it's ever been, right? They're declaring it fire season. It means it's time to stop trading. Things don't follow through, right? Yeah, Oliver's saying that, like, it, if there's a time where your 3 pushes might be just 2 pushes, it's for the next couple of months, right? It just, I mean, yeah, we're sticking to 3 pushes, but I'm telling you, there are going to be times like, and I think this morning was no exception. It's just that, like, during good market, earnings and all that other kind of stuff, out of 10 stocks, how many of them will, when the market is good, form an elephant bar and really go somewhere that'll deserve 3 pushes? I don't know. You guys tell me. Out of 10 stocks, if they give you a good event, how many will give you 3 clear pushes if they follow through? What do you guys think? No, during a good market. During like, yeah, I'm somewhere between 5 and 8, I would think. Right? Yeah, like if you get a power event of just about any kind, like, you'll see most of those stocks like following through, even if it is in a zone like this during a good market cycle, because the volume is there. People are pushing it through. What happens to the average true range of your stock, which is something we'll talk about more again next class? It increases, right? So when it's narrower, it's not going anywhere. And this is the perfect time for all these things that look powerful to just get hammered. So, if this is a great time to get 360, especially if there's no, and right now I'm going to ask the same question. How often do you see, like, if you have 10 stocks that you're watching in the morning, how many of them follow through and make 3 or more pushes and continue to new highs or low? Out of 10, how many of you guys are you seeing right now? Yeah, maybe 3. I think it's closer to 2 for me. So it's like, it's hard to, you just don't know which one's going to go anywhere, right? Some of them, they'll make 2 pushes and then make a strong reversal and go, well, that was the perfect thing, but it didn't. So, odds are a little different now, right? We see it in the morning with Oliver. He's taking he gets in massively, takes one push, and he's out. In the black team, some of you guys that are on the black team will see that, right? I'll just be like, well, I'm already out of this one, and you're like, when did you get in? But that's when you see him do some of his secret stuff that he doesn't want us to do. So yeah, so thanks for sharing this one, Michael. It's just a tricky one. Do you see what the error is, with this? I mean it's just a wider trap zone now because this can't really clear everything. Yeah. It's not wrong. And, there's going to be a time of year where this will go 15 more green bars taking off the 200 like this. It's just, this isn't the time, I think, is a way to put it. Because things just aren't doing much off the open. Now, on the other hand, Betty found Starbucks here, and let's see, what did we do? Okay, it looks like she saw the amazing Fab 4 and waited for the market to open to see how Starbucks would open, but when it opened and made a big gap, I was afraid to enter and waited for some pullback. All right, so what was Betty doing when she saw this, and what does this mean? What does this mean? How do we interpret this, right? I'll let Betty answer on that one. Right. And who's afraid, right? Betty's afraid, right? So that, right? That's the ego, right? That is the thing that, Oliver was talking about this morning, if you guys were watching, right? That's you stepping ahead. And I get it, totally understandable. And at the same time, you've just got to say event. It goes with location. Put the event stop. No fear, right? No fear. Now you took the first pullback. This is a pullback, and I actually, hey, if you're going to take this, great. You get in here. Looks like you entered somewhere in. Okay, that was a stop adjust. Okay. So 180. She took the 180 entry, right? And somewhere in here, the stop came down to here. So initially, the stop was here, moved down here, and everything came out at the whale complete. Now, why is this a great place to just close this entire trade? I do not disagree with her closing the entire trade here. It is well complete, but what else about this? Yeah. I mean, this thing fell off a cliff, but, how many more pivots lower do you think this has, right? I mean, maybe 2 hours later it'll continue down. I don't know, but when you see this, it's just like, you are allowed to close a trade on whale complete, and I would say this is the one that's right for that. And yes, if you want to trail pivots, the checklist will keep going, but I do think this will stop. And as you can see, at some point later in the day, this was up here. This is kind of like a massive fall off the cliff, and I think what it does is it goes this, and that's just me thinking about it, but has this moved an entire daily range in the first leg? Yes or no? This is Starbucks. Right. So my question is this. When you've already moved an entire daily range, and this is the real reason that I'm saying this, Is this a checklist trade or is it a scalp? It's a scalp, right? So as long as you guys understand that this had to be taken as a short-term trade. It could not be. It's just a one-directional, one-leg trade because this thing gave up the ghost in its first move, right? That's massive, right? So when you've already got your $1.50 or $2 or whatever, whatever the range is for Starbucks, definitely the first pullback is always, no matter how crazy it is, always playable. But you got to be a little more greedy on that when you've already, everybody who shorted, made a ton of money. I mean, like when Bitcoin was in the 60-some thousands, right? Oliver said something like, every person on Earth who's bought Bitcoin is profitable now. What's the next likely move? What's the next likely move, right? When the entire planet is profitable, it's gonna have some pullback, right? Yeah, it might make another smash up there, but it's like my guess is this was the low of the day here. So I just think, a scalp is good, but you got to leave it at that because this is already on Pluto. When you're already on Pluto, you don't expect 5 more pivots or something like that. So good job with that, Betty. I think that was pretty cool how you handled that one. But don't miss that first move. Even if you're afraid, Betty, just do this. And just to not miss it, just put one in. Right? Just put one.
Hey, good job.
You're like, I don't want to, just put one in, let it stop, and then play the pullback. And so let's say you put one in and it stops because it goes through the high. Boom, boom, boom. Play this one too. Right? Now you go -2. right here. Now that's you waited for that, but just don't not be in it. if you have to do that to make sure that you're in these, do that. And I know that Jan would probably say, no, you have to enter 2. And that's true. The checklist says enter 2, right? You got to be in 2 lots. But some of you guys, if you're getting shell shocked and you're like having too many things not follow through, don't not trade. Just go in smaller and leave it alone. Like, just say, I'm going to put on 1 lot, sit around, play whatever the pullback is. Like, if that's what you have to do. But I'm going to tell you this. This is how you're going to trail that 1 lot. You're not going to take profits on 3 pushes. I want you to practice doing number 7 on the checklist. Stop adjust it out. So what would that do? If you had to stop adjust this out, what stop adjustment would you use, right? To get to here. No stop adjust, right? Get to here. Nothing. What happens when you get down here? Well, now you start saying, I think this justifies a big bar stop adjust. Now, when you start getting down here, like here's a hidden green bar ignored. So there's no closing the trade here. But I think when you get down to about here, now you can bring the stop right to the hidden RBI. That's fine. Now we start getting way, way, way down here, and I go, you know what? Now I think bar by bar is justified. So you can bring it to here, right? Bring it to here. Now I think, okay, we can stop this out. Now, isn't that interesting? It'll take you all the way down to the bottom, and because it's moved dollars, like it's really moved like good, dollar plus on you, then you can say, all right, it would be ridiculous to give back, a ton of that, wouldn't it? Right? It would be ridiculous. So I don't know. Is that helpful, Betty? Like, and if it pulled back here sooner, that'd be fine. You could trail a pivot, but like, you just eliminate the 3 pushes, and you're that is you have the right but not the obligation to close a trade. But like, and I'm saying this. When would I use this? If fear is preventing you from taking trades, just make it the smallest risk you can imagine. But don't do it. And if you're going to do just one lot, go to number 7. Only stop adjusted out. Now, I will say this. If you're going to get in -1, don't miss a pullback if that's what you get. If you get this, you got to enter here. And now you're in 2 lots, right? Now you're in your 2 lots. Take your new low profit take and stop adjusted out. So is that going to help some of you guys like that are hesitating in the beginning? Now, I will say many of you might be hesitating because you're playing stocks that are too big for you. That's a good possibility, right? But this will allow you, I'd love to see a journal of that. Somebody who just got in one lot and just let it go. Just stop trying to control it. Because what's more difficult? Okay. All right, Tony. Yeah, I'll move right along so that you can get going, right? What's more important, that you get that 3 pushes, or that you like, what's going to be harder? What's going to give you the most growth? Taking your 3rd push or your whale complete profit take, or being able to practice your stop adjusts? Okay, and why? Why is that more important? What is that going to give you? Okay, experience, overcome fear. What are the results though? How is that? What are the results of that going to be? Like in terms of your winners, what are the results? Yeah, some of you are getting your 30 cents and missing dollars, right? This is the only way you're going to get dollar moves, right? It's the only way you can get dollar moves. The 3 push thing and the whale complete, you'll get your 50-cent moves. But most of the time, you'll never get your dollar moves. What did Betty get here? 30 cents, 40 cents, something like that. You'll always miss this one, right? So I just want you to think on that a little bit. That should open things up for you. Now let's see. Is it okay if I just do like, Tony, do you have a bunch of stuff? What was your plan here? Okay. Ramit said, hesitate on the first bar, even if it's a good event. As many times it turns sour with violence, as it happened today with UAL. Sure. Okay. Nice stuff, Betty. I hope that helps, because we don't want you to miss these. And here's the same trade. Okay. So now Betty's kind of checklisting this one out. This looks like it was a long here, and then an add here, and another add here, or something like that. Oh, I see. You sold down to 2, and then you added here, and then probably stopped out here, right? Okay, Carlos. Good stuff. And so, okay, I see what happened here. You're playing counter trend on this. Here's the thing about counter trend. Here's this kind of like trappy zone. It creates a new trap zone now at the beginning of the day, and you're trapped until this area resolves itself. And sometimes the way that it resolves itself is it traps everybody on Earth and then runs them in like this. And so it's kind of like after a really extended move, everybody's shorting new lows. You know how Oliver's saying everybody's going long and new highs. Well, everybody's shorting the new lows. And when that gets wiped out, this is the real power. That's the one at 11 a.m. that takes off, right? So, I'm saying Gurmeet's point is hesitation comes from having to decide when the trade comes up. If you've already decided I will play any bar, elephant bar in the location double minus, then all you need to do is hit the button, right? Yeah. So, I think I'm going to move on from this one, Betty. But this low is this power here where you started the long? I mean, it is kind of a failed new low, but is there power here? Yeah, I really don't like weak counter trend events. It needs to put the nail in the coffin. I think this one puts the nail in the coffin here. Something like, I think this is the only green bar that stands out on the chart this whole time. Like, this is the biggest green bar of the morning right here. That's the one. That might be playable. Oh, you did do that long. Okay. Way to stick with one stock and just make it work. Good stuff. And you didn't lose too much here, so that's good. But I'm going to move on this one. So thanks for that. All right, so Aka. Long 2 lots. I like it. We started with these tiny bars. You did a max loss per trade of $100. Looks like that was roughly 50 cents. So 2 lots was okay. You got your pushes, took one here, added right here, right? Because it took out the red. Moved your stop here, which I think is early. You see that? See why this is early? This did not push away. This did not push away. So up in here, above here, that's when the stop can move to color. But I think what's happening is you're playing a little bit outside of your range. And the reason that I'm giving you a hard time about this, even though this held, which is nice, is here's the 20 and the 200. Can this pull back to here and not even interfere with the trend? Like, is the trend over if this low is taken out? Does this just eliminate Twitter for the day? No more new highs if you just get below here? When you have like this cradling 20 MA below and all that kind of thing. I don't think so. I think if you get down below here, now, I mean, you've already stated that that's all you can afford, but it's just like, yeah, there's kind of a lot of support here, so it needs to be able to take that out. So I think this color stop doesn't happen until 0.5 where you kind of get a new high. Now you go, okay, I don't want to lose here, and I think you can somewhere, this ad isn't terrible. You can do that. You just can't move the stop yet. So, as it makes a new high, this gets more solid. And then I see you've made an 8 MA stop out here, which It is reacting to the 8, and maybe. It is a grind, so I guess we can call that a 2-bar stop here, but it's is this the picture of a power trend, guys? Is this the picture of a power trend? Not really, is it? I mean, it got Aka out, but you know, it. I don't know. 10 bars or 8 bars does not a power trend make in my experience. I think this is still kind of a pivot stop, and you might have found this up here later. So, it, I get it. I get it, because it does seem to be the AMA holding it, but okay. 2 RBIs, MA13 power trend. Okay, well, I mean, I suppose you could do that. It does have RBI here and an RBI here. So, you could say if it's just doing that kind of a grind, you can call it a power trend. I just have a different image of a power trend, but I kind of like what Jan's saying about that there. That's true. Like, it is just kind of grinding here, knocking those out, and then you kind of have your 2-bar break right here. So, but cool. Cool trade there, Aka. Let's see. I think Aka has another one here. Yeah. So great identifying the Fabulous 4, nice and narrow, beautiful vent. We saw this exact same trade, right? Before somebody else took it, shorted the 2 lots. Profit take here. Everybody's taking it in the same place. Did add right here. Totally fine. New low profit take. Stop out here. Short here. Stopped here. Went long one here. Closed it there. All right, this last one, I don't know where we're going with that one. Okay, you're just getting a little greedy there. It's getting a little late in that move, but and I think here, here's the short and the 20. Why is this not? You've closed the trade, right? You've closed the trade. Why is this maybe not a good place to open a new one? Yeah, it's really hard to get, like, what's happening here? What do we call this area off this power move up? What's the word for that? There's a strong pullback. And here's it's this. So we're shorting here. Here's a real power leg. We call that the shadow. And when the shadow is right there, anything that falls in here is probably just going to go up, right? What wipes out the shadow? Right. So Oliver talks about, that story from Las Vegas where they built a building really big so that it would, the sun would cast a shadow on the competition's like pool party so it wouldn't be popular anymore. What do you do to prevent that? Yeah. You build your building over here and now the shadow doesn't get involved in the pool party down below, right? But anything here, there's going to be, if the sun's over here, right? Now the shade is just going to rain on your parade. You're not going to get anything, right? It's just going to go that way. Over time, right? Now we've got a big move up. Over time, now that shadow doesn't have its effect anymore, and this can come down over here, right? See what I'm saying? Like it takes time to get away from this, and then it doesn't have any power. When you have a near pullback, like, is this a pullback or is this a reversal? Is that a nosedive? There's got to be an opposite word for nosedive for when you're short. Like, is this a pullback or is this a rocket taking off? That's the question. How it pulls back is important. That's more of a rocket. So don't sell against that rocket, is what I'm saying. Even though it might be exciting. Now, Tony, did you want to jump in? I know we're running low here, but if you've got something to go, I can cut it short here, and we'll just put a break in. And guys, it's the first class, and the first couple of classes we have a ton of material to give you, so it's kind of cut short sometimes. And let's get Tony going. Aka, I'm going to put this on for next time. And yeah, we have lots of stuff in here and translators to flip around. You guys are doing great stuff. And if you're there, Tony, I'm going to hand it off to you. Well done, guys. Yeah, you're welcome.
Hey, good job. Hey, good job.
Sound check. 1, 2, 3, 4, 5. 1, 2, 3, 4, 5. Fives. All right. Got some fives. All right. Thank you, Tyler. Did a great job. Thank you for leaving me some minutes because we want to let Paola go a little early. She's got another translation to do, so she's really busy. So we got to try to wrap it up as soon as we can. Thank you, Dennis. I'm back. I was on a little vacation there, but I'm back. Let's see. So this is the first class of the month. I'm going to start off with one of the favorite presentations, and I'll leave you in suspense till we hit it. I like to start off by showing you how the market's doing. The Dow right now gapped up a little, it showed you a green bar, and then rolled over. Look at this, how it just came down. Shows you a bull 180, but it didn't work. It just went sideways and rolled over, kept diving, kept going down and down and down. So the Dow, I think, was near all-time highs, and it just went down. The NASDAQ, it gives you a topping tail right below the prior day's close. Then it gives you a couple of green bars. So you have a bull 180, and then you have a bear 180, and then another bull 180, right? So that's kind of unusual. A lot of bull right there. So then it goes sideways, gets a little strength, breaks through the prior day's close, and goes up. So you guys need to learn how to read these charts, right? You become experts at it when you read the charts. So I'm kind of like going through it so you guys get the hang of it, right? The NASDAQ falls back down below prior day's close and then goes back up again. Hits a high. You get a couple of wicks up here. Remember, a wick is just a small little candle wick, right? These are candle wicks. A tail needs to be at least 2/3 the size of the body. So these are not tails, these are little wicks, right? This one's getting close to be a tail. 2/3 the size of the body, right? 70, 80%. All right, goes sideways and comes back down. So looks like it wants to push up again. S&P 500 gives you a couple of these topping tails, right? So you see this topping tail is more than 2/3 the size of the body. These are narrow little bodies and big tails. So that means the power is downward. The bears are in control, right? And just keeps going down. Gives you a bottoming tail, kind of, right? And then just gives you a bear elephant bar. It just pushes down hard. Follow through. Levels off. Breaks down. It's kind of going sideways. So that's what we're seeing now. And here's the heat map, right? So technology's doing okay. Microsoft, Adobe, Oracle. Apple's kind of down a little, break even down. The finances, Visa's kind of break even. These are down a little bit. Down, down, down. All right, semiconductors are down. Information, software down. Google's up a little. Facebook's up 1.85. That's nice. So the rest are telecoms, entertainment's down. So what's up? Real estate. Look at real estate. That's kind of green. All right. All right. Let me get through that. Got to keep track of time so I can give Paola some time in between her sessions. No, this is not what I want. All right. Let's start the presentation. All right. We have some new people here. This could be new for you. We have a lot of people that repeat, and so this is a repeat for you. But repetition is what creates mastery of your skills. So hearing this over and over and over kind of like embeds it in your brain, right? So you start to learn it, and you'll start to memorize it, and you'll have it like the back of your hands. You'll know what to look for when you see it. You know how to react without thinking. You just go for it. All right, so now, okay, for those of you in the Kickstart program, you don't have the manual. This is a couple pages out of the manual that I'm presenting to you, right? So the 200 moving average, right? The mighty 200 moving average. That is the king of all moving averages, right? And flatness is king. And when you see a flat 200 moving average, it's usually going to be resistance or support, depending on which direction the price is going, right? So flatness is king, but then you have support and you have resistance. And it's used like a magnet, right? The price always comes back to it, back and forth, like it does with the 20. All right? So here we show you examples of support, right? The price drops right through the 20 moving average and into this 200 moving average, right? So you have a nice red bars following through into this zone and then bounces back up. Its prior high rolls over, comes back down into the 200 moving average zone and goes back up. So this is support. All right. Previously, this was resistance. So what was once resistance is now support. Here's another example of resistance, right? The red line is the 200 moving average. So this price goes up, gives you a nice topping tail right in the 200 moving average zone, pulls back to the 20, then it bounces back up to the 200. So it's like in a channel here. It got caught in a channel, and it's bouncing back and forth. On the 20 moving average to 200 moving average, back and forth. Touches it, comes back down. Touches it, sideways, touches it. So this is resistance big time, right? There's a couple more examples. You have this bull, this big bad bull elephant bar just straight up. And you're like, whoa, yeah, that's like a little power surge right there. It gives you a little follow through, but you run into this 200 moving average. The flat mighty 200 moving average zone, and it just knocks it back down. Rolls over, comes back down. You get more strength in the bottom and tail, and you get more strength right up to resistance again, knocks it back down. Resistance again, down. So this happened 4 or 5 times. See that? I'm explaining this to you because I wanted to show you Oliver's favorite #1 play, right? The power surge originating off the 200 moving average, the mighty 200 moving average. It's very high probabilities of it working 80% of the time. So I want you guys to become experts at this, because this is another tool for your toolbox, right? I show you guys little tools for your toolboxes. So when you see these things happen, you'll know what to do without thinking about it. You just know. So it's hard to see the 200 moving average down here, and then it takes off. So I got these pictures right from Oliver. This is Oliver's drawings on here, right? So he talked about we had 2 major areas of support here, right? The 200 moving average and the big power bar as support. This power bar pulls back and goes. So we have this power surge, right? Here's the 200 moving average. We have a power surge. It takes out the opening bar, takes out the red bar. There's a topping tail in here you can't see because this is a bad picture. Takes that out. And basically took out the Fab 4, right? Because this is the Fab 4, as you guys know. So this just takes everything out. And power surges up, right? So as when you're first starting off, you might want to get, with one share, one lot or 2 lots, depending on what, your multiple loss per day is, or per trade. But as you get better and you increase your size, then you might want to go in light, medium, or heavy. So it depends on how good a power surge you see, what lot size you want to go in on. Here's another example of QCOM, right? These are old pictures. So here's a 200. We have support near the 200. You have this power bar. So this is the #1 play you pile in, right? Oliver would pile in heavy and let it ride and go all the way to the bank, right? But for you guys just starting off, you might just want to go 1 lot, maybe 2 lots. This is a $49 stock at the time. Then you do your 1 or 2 pushes, 3 pushes, 2 or 3 pushes, and you're out, right? Or you let 1 ride all the way to the top. So basically, here's another one, JD. You have a power surge near the 200. Here's the 200. Power surge. Remember, the 200 is a zone. It's not this line. So this is a little above the 200 because it's the zone. So you don't have to touch it. Just be in the zone. Then you pile in. And it's a key play. It just surges on up. And when you see this bear 180, it's time for you to bail out. You're out. All right? Well, actually, you guys would do 2 or 3 pushes. You might want to leave 1 lot. And you see a bear 180 or a topping tail or some flag that tells you it's time to get out, you're out. Here's NVIDIA a long time ago when it was 150. It just recently was over 700. So you had the 200 moving average kind of diagonally over here moving up, right? You have a power surge taking off that 200 moving average zone. takes out the red bar and goes, clears everything. Power surges up, right? 2 or 3 pushes, you're out. I don't know if a Ruby was developing here or what was going on, but at least you're profitable. You want to try to be consistently profitable. This one I cut off the right side, but it was a lower price stock. So what you can do is you get your IFT 50 and you sort them. I used to sort them by price. So I could start off with the lower price stocks, right? And then just go right down the list. And I would see like a power surge like this, and I was like, oh, off the 200, a bull elephant bar off the 200 moving average, I'm in, right? This was like a kind of narrow Fab 4, right? And you're in. Pulls back, takes off, riding the 8 train up. You can add, move your stop up to here. A ribby, you can add, move after it follows through, then you move your stop up, right? Ride the 8 train all the way to the profit station up here where it's telling you time to get out. This is the exhausted area. This is where it starts to roll over. You had a nice run up. You're into profits. You have the right to take your profits and get out. Sometimes you can combine the bars because they're not always going to be picture perfect like I'm trying to show you here, right? You have to use your imagination a little bit and combine the bars. And this is not at the open. This is later on around 10:18, 10:20, right? You have the 200 moving. This pulls back. We have this originated from a bull 180 down here. Starts coming up to the mighty 200, gives you topping tails, kind of pulls back to the A, and then breaks through the 200 moving average, gives you topping tails, kind of rolls back to the 200 moving average, and then it gives you a small little topping tail bars, small little bars, and then a larger bar, and then more follow through with a bigger bar. So you combine this, and this is like a power surge right off the 200 moving average at 10:20, right? Not at the open. Doesn't always have to be at the open, but that's a good time to find them, to see them. So here you can get in, right? This would be anticipation, not a confirmation. You get in the big bars, you get in. You anticipate, get in, let it ride. Put your stop. I would put my stop below the 200 right down here and let it go up. A ribby keeps going up, but then it pulls back on you hard. So it's time to get out because it's already had your 2 or 3 pushes. You did good. You're profitable. You're out. Now, if you wanted to leave one lot on this big pullback, I'll teach you pullbacks in a couple of weeks. But right now, I would probably just get out. You know, you had a nice little run. You're profitable. You're good. Right? Yeah, the origin of the trend was this bull 180. This is like getting the middle. This is the exhausted area up here. This is kind of exhausted too if you want to get out quicker. Which I did today in one of my trades and I regretted it. I'll show you later. Boy, did I messed up. Tiger was talking about that, getting out too early. I love to critique myself because that's how you grow. Okay, here we have a bear power search, right? The 200 moving average, the Fab 4 is your trap zone. This opens up and gives you a nice bear elephant bar below the 200 moving average and keeps following through. Another bear elephant bar and another. So that's nice 2 pushes right there and you're out. Because this pulls back substantially, you know, halfway from here. It's half enough up here and then rolls over, but it's not much after that. I would, you know, you have 2, 3 push. You can count these as 3 when you have big bars like this, you know, and you're out. All right. So you can combine these bars. See, I would have saw this. This is a 1-minute chart. I would have seen this, and well, yesterday it had a little strong green bar up, right? right to the 200 moving average. Your Fab 4 is kind of narrow, and then it shows you a power surge in the morning. So this is kind of like follow through from yesterday. You combine these bars, and this is a big power surge, sideways and up. So they're not always going to be picture perfect. So you have to just see what the scenario shows you, how to play it. Use your mind, your imagination, right? And then follow through, topping tail, I'm out. Ride the A train up. There's a little ribby or sideways action, a little pullback, a little rest, a little pause, and then shows you the top and tail. You had a nice run right in there. You're out. You're profitable. You're good. So here we have a bear 180 power surge down. Right. This one developed above the 200 moving average and came back down. So there are different scenarios you're going to see. So I'm trying to show you different ones. It follows through and keeps going down. 2, 3 pushes gives you a Gibby. Keeps following right in the 8 string down. Pull back, and then another hard push down before it hits bottom and turns around and comes back up. So this would have given you a nice run. Even if you did your 2, 3 pushes and you're out, it would have been profitable. So you want to be consistently profitable. I'm trying to go a little fast because I'm running out of time. Power surge up, sideways, going up, ribby, top and tail, you're out. Combining bars in 200 zone. Well, in this case, was combining these bars and the gap up. So you got to use the gap up. Use your imagination. Here's a couple of my trades. Here was a narrow Fab 4, power surge up, boom, I'm in, da 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 da, and it goes right up the 8 train. Shh. On this little pullback, I started layering out. Ding down, keeps going up, layering out, da da da, boom, finally got all out. You see the dots over here in the 1 minute, how it rolled up. This one was very similar. Power surge, but it didn't really follow through. It pulled back. But I started adding even more, as you can see, because I'm thinking it's going to bounce off this and keep going up, and it did, right? It got to the prior's high, and I was out. Right? I overshot. You can see a little blue bar there, overshot a little bit, but profitable, because as it was going down, I'm lowering my average price because I keep adding, bounces up, my average price is lower, and then I layer out going up. But that's more when you have sides. Okay, multiple power surges. Here's a power surge off the 20. Here's another of the 200 moving average. Here's another one. There's another one. And you have a bull 180. I'll teach you about bull 180s. 2-to-1 win ratio to the 20. That's the origin of this trend going up. Hits the 200, goes sideways, gives you another power surge up. Right? There's another bull one, but with no win ratio. More examples. Momo, narrow Fab 4, 200 moving average, power surge up, you're in. This one only had like 1, 2 pushes and you're out. This is a quick one. So you have to be flexible. Power surge, neutral bars, bear up on bars, sideways and down. See? Neutral bars, goes down, sideways and down, sideways and down. Here's a power surge off the 200, goes up, a 180, you're out. Okay, so I wanted to show you a few more plays before I have to go. I got like a few minutes left. This is Madura. I did this one this morning. We had power surge, narrow Fab 4, power surge up. I'm in. But I'm a little nervous with this stock because it moves fast and it can go against you real fast. So I got out here. Boy, did I make a mistake, right? This is my big mistake. I was profitable. I did good, but I left this all on the table. Oh, man. I messed that up. But it's okay. I mean, we're constantly learning. We're constantly, this is a challenge, and it takes a while to learn. And you have to constantly practice and get good at it. But this was my live account. I should have left it go. I could have made a lot more when I did. But I did okay. Not bad. All right, so here we go. Today, this morning, Owens and Minor, narrow Fab 4, power surge up. This is a $48 stock. Within your range, you guys can play these. I try to find the ones that are in lower price range. This one, narrow Fab 4, gaps up. Gives you a bull elephant bar. Man, you get in. Participation. In, fast. Anticipation, you're in. Let it go. 2 pushes, you're out. Topping tail, big flag right there telling you, get out, get out. You're out. Right? Here's another one. Power surge off the 200 movement, but it does not have follow through. Immediately pulls back substantially. Right? But then turns around, goes right up, gives you a ribby, right up, ribby, right up, right in the 8 train up to the topping tail station, you're out. Even gives you a 180 up here. Look at that, with no little following through, you're out. Okay. Here's a topping tail, right? Could be a topping tail right off the 200 moving average. Little pullback and up the A train. Ribby keeps going up. So what do you do with a ribby? You add more. Let it go up. As it's following through and going up, then you move your stop up. Let it follow through. Another ribby, follow through. Move your stop. You can add. But over here is the exhausted area. I would stop adding. You want to add in the lower sections down here. Here's looking for profits to get out in this area up here. Pin, look at this, right? Power surge, bull elephant bar right off the 200 moving average with follow through. Little top, little tails, little wicks here, right? Little the topping tail, but it's green and keeps going up. Pulls back to the 8, keeps going up. Pulls back to the 20 moving average, goes sideways, breaks out, little ribbies, you're out. You gotta learn to read these. Draft King, Fab 4, gaps up a little, gives you a bull elephant bar, beautiful looking bull elephant, $51 stock. Within your price range, you jump in, you anticipate, try to get in before this bar is even closed. Even down here, halfway through this bar, you get in. And let it push 1, 2, 3. Then you can get out. You'll be consistently profitable, right? This is Oliver's number 1 play, the power surge. You guys got to learn these when you see them. Jump on them. It's going to make you consistently profitable, right? Because these are the steps you need to take to become a master trader to be consistently profitable. This power surge, you combine it, ribby up, pull back sideways, ride the A train up. Space, right? A lot of the younger retailers like that one. Power surge. This one didn't follow through. This one pulls back substantially. Goes sideways and it starts to ride the A train, pulls back to the 20, then it takes off. All green in here. Look, no red bars. Nice little ribby. The exhausted area up here, I would be looking to get out up here. All right? You add near the bottom and you look to get out up here. What do we have here? Not too much. And this, if you combine these, would be a nice power surge up. A couple pushes. See, they're not all going to be perfect, right? So you're going to see different scenarios. So you have to learn to play the scenario. Look at this one. Oof. In the trap zone, gives you a bull elephant bar. It clears all this. Clearing bull elephant bar. Then it just breaks to the 200 and rides the A train. Look at this ride. What a beautiful ride. Right? You could have added, move your stop in this area. You add, move your stop. Ride the A train. Non-stop. Oh, another ribby. Whoa. In this case, I don't know if you want to add in here, if you added size down here, but you just keep riding the A train up, right? As it keeps following through and going up, then you can move your stop all the way up and you're out. This is a $14 stock. This is, definitely within your price range. Power surge. Look at this one. Jumps up. All right, you guys. I had a whole bunch of them. Look at this one. I can't show them all to you. I can't talk about them all because I got to go. I got to give Paola time before the next session. So, I hope you enjoyed the class. Jan, are you there? We had a good session today. I didn't get to see your questions because I was going so fast.
Yes, thank you, Tony. Thank you, Tony. Thank you, Tyler.
Yeah, you're welcome.
Thank you, Paola. Thanks, everybody, for participating. Clap, clap, clap. And we'll see each other on Wednesday for the second session. Wednesday, 12 noon, New York time. And we'll be presenting, Tyler will be presenting to you checklist part 1, okay? Send in some journals. So if you don't know exactly how to make a journal, it doesn't matter. Just make your best attempt for now and send in a journal and work on that 20 trades maximum. Biggest loss from 20 trades, please. Okay. So collect those 20 trades, and we'll see each other on Wednesday. Thank you. Bye bye. Oh, I'll be sending out the recording. Hopefully today, but I still have to make the email list based on information provided by accounting. So I'll try it today, otherwise tomorrow morning.